First of all, I have to say I'm not a financial advisor and I don't have any studies or anything related to financial in my background. Everything in this video I got from reading books, listening to podcasts and my own experience. This, however, will be the easiest guide to investing you will ever see. This is especially for people who just want to put their money every month and see it grow. This is, however, not a guide if you want the best stocks to pick in 2023. So first, I would like to talk about how I started investing because it is very relevant to where I am today. I started investing in 2020, right before Corona happened. Why is this important? Well, because what happened was a crash. The crash, when you zoom out now, doesn't look that big, but when you're in it, it's insane. I saw my portfolio drop in half within a month. And I could have lost a lot of money if I would have sold. But I held through it and the market corrected. It actually was a very fast crash and it corrected very fast. But when you're in it, it feels like an eternity. During that time, I spent so much time figuring out the best investment strategies, the best stocks to pick, when to buy and when to sell. At the end, I barely catched up with the performance of the S&P 500. The S&P 500 is an index. If you invest your money in it, it will be automatically spread along the 500 biggest companies in the US. This makes it a very famous option for investing. Most people cannot consistently outperform the S&P 500, and if they can, they're probably much smarter than you and me. No offense, but it's the truth. This is why I switched my whole strategy at the beginning of this year. But first, I would like to talk about what you can actually expect from investing into the stock market. If we take a look at the S&P 500 index, which we just talked about, for the past 100 years, it had an average return of 10% every year. So it's fair and relatively safe to say that you can expect a return of about 8% a year in the long term. At first, this doesn't sound like a lot, but there is something called the compound effect. It's also called the snowball effect. What does this mean? Simply, take a snowball and start rolling it down the hill. At first, it takes many rolls to get bigger. But at the end, as it further gets down the hill, it grows faster and faster. Let's take a look at it in detail with a few examples. Let's say you're 20 years old and you're ready to invest 500 every month into the stock market. This will turn into about 90,000 in about 10 years, of which 30,000 is so-called interest. This is the money you solely gained from investing into the stock market. But let's zoom out further. If you invest till you're 50 years old, your money turns into 700,000, of which 500,000 is just interest, which you gained from investing into the stock market. Here you can really see the compounding effect that investing into the stock market has. I leave a link to this calculator in the video description down below so you can check it out for yourself. Now let's come back to the topic on how I invest. First of all, I have my investment split fairly equally. First, I have around 25% invested in the S&P 500, which we just talked about. Another 25% is invested into the Nasdaq. The Nasdaq has more than 3,000 tech-heavy companies in the US. And the other 50% is split into two copy traders, making each 25% on the platform I use. Copy trading is a very unique feature on eToro, which is the service I use. I simply automatically copy the trades of certain people. I leave a link to the app which I use, eToro for investing, down below. If you choose to invest and download the app, I get a small commission. However, you don't have to invest like me because this is the easiest guide to investing and there is an even easier option. There is an option called an all-world ETF. For example, the MSCI World. This is an index which covers 85% of the whole stock market. So by investing into this one stock, you get an exposure of 85% all the stocks in the world, making it a very stable but also safe investment. This index is considered one of the safest investments in the stock market, and therefore it gets chosen a lot by people who want to keep it very simple. You don't have to do a lot of research, simply invest your money every month into an MSCI World and forget about it. Before you go, I have one additional thing to say, and investing is about time. The amount of money you invest doesn't matter, and the time you start investing also doesn't matter. I just think it's best if you start as early as possible to get a feeling for it. The earlier you understand, the earlier you learn on how the stock market behaves. And the earlier you start, the earlier you will experience a crash. And this is important because a crash is something that will happen. And in generally, I think it's way better if you experience a crash with a bit less money in your investment account than if you already have $500,000 and you see it sliced in half. And with that being said, let me know down in the comments if you're investing already and how are you investing. And here is my favorite comment of the past week. With that being said, have a great one. Bye bye.